Well, hello everybody. It's Saturday. Happy Easter. For those who celebrated, hello TND Tesla, Sean D, and LAX Guy, and of course, Trading Apologist. Thank you all for coming. I'm going to recap what happened this week, and some crazy records were broken, and we'll put a lot of things in context as to where we are. And could we be seeing the beginning of an alt season kicking off? Let's have a look. And of course, this is not financial advice. And thank you to everybody as well on Patreon. First of all, if you look at crypto against Bitcoin in the last 7 days, we have one winner, and that's Solana. And last time around, the mini alt season was kicked off by Solana, and this time is no different. It's very similar to late 2020, 2021, when Ethereum led the way. Now we have a new leader. So we'll see what happens if this thing really has legs. And yes, it's been a brutal, call it a bear market for the alts. But could this recovery be fast and swift? We'll see. Thank you, Do Travels. And by the way, the global liquidity is painting a beautiful picture for us as well. That is crypto versus Bitcoin. And in dollar terms, again, still Solana up a solid 14% of the week, outperforming everything else. Bitcoin up 1.9%, just above 85K. It's acting a bit like a stable coin, is the common joke for Bitcoin, but everything else is mixed. Now, good news as well. We've seen a bottom for the ETFs. We see that the ETFs are climbing at last, ending the week positive for the first time in the last 3 weeks. So we'll have some good stuff to report next Tuesday on Okta on that. So TradFi is coming back. That means people are less fearful. And it looks like the fear from the tariffs have definitely bottomed. So all the bottom signals are in over the last 2 weeks. Now we're beginning to see a pickup in price action. Thank you, friendly man. And everybody, good to see everybody all over the world. We've got Thailand, we've got Spain, we have Netherlands, Germany. Where else? All these great countries. Thank you for coming. And dominance for the crypto dominance, Bitcoin dominance fans. This week, dominance broke 63%. But that has then since changed, by the way, because the alts are rebounding at last. That's a good thing to see. In addition, Solana, a little bit of Solana news. DePin explodes. This was pretty impressive. We talk a little about DePin being a top key narrative for crypto. But Helium, which is the Solana-based DePin project, hits all-time high in daily active users and total mobile hotspots. Over 800,000 plus Helium users and nearly 93,000 hotspots around the world. And there are major phone carriers like T-Mobile, global German phone company, that are actually using this network as well when they have run out of capacity. So we're seeing the first real-life application of a decentralized physical infrastructure project happening on Solana with real adoption. Many other chains tried to pull off kind of telco type plays on crypto, and they all failed. But this one is not failing. It's actually working. Thank you, Joseph, for coming. In addition, it's kind of like, this should nearly be meme of the jour, but we see some weird stuff happening around the world with countries looking to stack Bitcoin. 2 members of parliament in Sweden are looking to build a strategic Bitcoin reserve. The US is trying to find ways of getting money as quickly as possible to build one. But for perspective, global governments own just less than 2.5% of the Bitcoin supply. Remember, this assumes 21 million Bitcoin. Of course, it'll never exist, but that's 2.49%. And Michael Saylor and Strategy now own 2.53%. Michael Saylor owns more than all the governments around the world. How long can this last? Bro, man, thank you for coming. And a lot of people are worried maybe this is too much power for one man, but it's not one man, it's a corporation. So be less worried. And he had the courage to be the first mover in this space. And it's been life-changing for many people. So congratulations to all out there. And I still hold. And speaking of governments, China apparently, allegedly, from legitimate targets, sold 8% of their Bitcoin for gold. Remember, China had about 193,000 Bitcoin. The US had about 207,000 Bitcoin. But they sold 8%, approximately 15,000 Bitcoin, to buy gold. Now, if you think about this carefully, it kind of makes sense because the Chinese and the Russians have been stacking gold like crazy to shore up their central banks and to take themselves away from the US dollar hegemony and get away from sanctions and everything else like that. So that's why they're doing it. And, considering their bag is so big of gold, they don't want to implode the value of their gold, instead add to it as they go forward. So maybe that's part of the reason too. And anyway, they confiscate all the Bitcoin anyway, so it's no skin off their backs. As they say, China loves gold, and in India too. They're stacking as well. Thank you as well for 9-7 for sharing that little piece of info as well. And yeah, exactly. And that's another good point as well. MicroStrategy can't print money and buy Bitcoin. Governments can, and they will. Very good point. The government, as many people have said, the first nation to print their worthless paper fiat for Bitcoin will win. So, but it takes courage to do that, and governments aren't very courageous. Anyway, moving on. And speaking of Bitcoin and ETFs as well, this is kind of a fascinating little statistic from Bitwise. And it talks about how the total number of Bitcoin purchased by US ETFs since it began about 13 months ago is 529,325 Bitcoin. And the new Bitcoin supply since the US spot ETFs launched, 249,725. By the way, there was some confusion yesterday about why all the allocations and holdings across all the different cohorts have gone up since 2020. The answer is up until April, whatever it was, 20th, 21st, 2024, 900 Bitcoin were issued per day. And since that time, 450 Bitcoin are issued per day. That's why the balances keep going up, because the amount of supply keeps going up. So I hope that's very clear to everybody. But again, we are still very early in this space. Also, good to see on-chain activity is rebounding, especially in things like Solana. And you can see Solana dominates all the other chains, not only in daily active users, but also daily transactions. There was a little bit of a slump after the meme revolution ended, but now glad to see it's coming back. And I'm not the first one to notice this too. This is also picked up by some analysts as well. This is from Mark Arjun. Solana recorded its highest daily revenue since February. And revenue has been trending upwards since early April as network activity begins to pick back up. So that is seen in all the charts. So yes, Solana is not dead by no stretch of the imagination. And another record-breaking news too. For the first time ever in the history of mankind, stablecoin volume has beaten Visa payments. That's just a sign of things to come. Can you imagine when countries really start adopting stablecoins to move money around? That'll smoke Visa, and we all know how big the market cap is of Visa. So this is all changing very fast, and stablecoins are a top, of course, use case for crypto. And Base, the chain, the layer 2 on Ethereum that's cannibalizing Ethereum, apparently got into some hot water this week as well, because a lot of people are talking about the rug pull from Base. Apparently some meme thing, as the memes leave Solana, now they're going over to Base, and now rug pulls are happening. Rug pulls happen everywhere. Be careful out there in the Wild West. And Base is trying to recover its reputation for this too. So read into it if you like. In addition, a little bit of bad news too. All the top banks and analysts have cut their S&P 500 targets for the year 2025. There's no doubt that tariffs have taken their toll on many expectations. The red dot was the original expectation in mid-January of this year. And now, middle of April, 3 months later, boom, they've come down an awful lot. The average target was about 6,600 for the year for the S&P 500. And right now, the targets for the year are pretty much hovering about where the S&P 500 is. So the good news is no downside. The other good news is analysts are often wrong. So I do believe we could get a good pickup in the S&P 500 in the second half of this year, especially as rates come down. So remember, don't trust your analysts. Do your own research. Another fun article that came out as well is an opinion piece by a top guru in the space. Believes that robotaxi means Uber will be outdated and out of business in 10 years. I think this article is actually wrong. I think it's going to be a lot sooner than that. Remember, the pace of change is what matters, the rate of change. And these things are going to come fast and furious and dominate the world. And this is what an Uber killer looks like. I've been in one twice at the We Robot event, and they are extremely special, extremely minimalist. And rumor has it, Tesla will be able to produce these things for $15,000. They will drive themselves, and they will make at least $50,000 a year in profit. Imagine investing 15 grand and making something that generates 50K a year. That's called infinite ROI. And that's what people don't understand when they analyze stocks like Tesla. Anyway, we'll see what happens. June is coming. And the earnings call, by the way, I will be on doing the earnings call live with the Cyber Bulls on Tuesday. So it'll be a very exciting show. And the most important part of that earnings call is really to understand the future roadmap and when things will be delivered. So I look forward to that. Now, a little bit of macro news, because we had some crazy macro stuff happening. And it's rare, as somebody who used to work in the FX business, it's rare you see things change so fast. This is the ECB rate cut, which took a lot of central banks by surprise. Hey, Rolfer, thank you for coming. But the ECB cut their benchmark rate for the 7th time since June 2024. You can see how fast rates went up from mid-2022 up until mid-2023, 12 months of straight hikes. And now they have 7 cuts in basically a pretty short window of time. So what goes up comes down, classic mean reversion chart. And the other problem is when a central bank cuts, they rose in coordination with other central banks. Now they're cutting without coordination of other central banks, which means things are getting messed up. If we look at the euro versus US dollar, it's up 11%. The big joke over late last year was, oh, wow, Europe is now so cheap to visit because the euro is so weak. Well, that's changed. European vacations have just gotten 11% more expensive so far this year. So that's a pretty rapid move in foreign exchange, everybody. It's rare you see that massive swing, which is a huge impact on trade as well. Again, these tariffs are causing a lot of massive macroeconomic shocks all over the world. And other interesting news too, on the private equity fund side, private equity firms, and these are firms that buy kind of early stage companies, but they're not IPOing. They choose a different route. Or companies that have been completely re-engineered to turn profitable or whatever else. These private equity firms are sitting on a record number of companies globally, and they're waiting to sell. The reason they cannot sell is the market conditions suck. There's nobody who'll buy, especially now with all the caution out there in the market. So we'll see. When this glut comes down, that's a good sign that the markets are back. But in the meantime, they will be holding until they get the prices that they like. So it's, again, overall, a good time to buy some things because the markets are pretty weak. And uncertainty has never been so uncertain in the history of the world, per the IMF. And this is trade policy uncertainty is off the charts. And this has also a very negative impact on economies, because when people don't know what's coming next, they sit on their hands. They don't buy, they don't sell, they don't trade, they don't negotiate, they don't sign contracts. Everything stops. So I'm hoping that all of this trade noise goes away real fast, or else it could be a cataclysmic year in macro for the planet. We are already seeing massive macroeconomic shocks happen in places like China as well. So let's talk a little bit more about global trade value add. This is manufacturing share of global value add. And in China, you can see they've been working on policies to boost chronically low level of private consumption. And these include one-step dial-back industrial policies, pervasive state involvement in industry, etc. But such actions, if decisive enough, would lift confidence and domestic demand and help repair damaged trade relations. And apparently, rumor has it this week as well, China is open to negotiating. They've appointed a new trade negotiator for the country. And we'll see. But either way, if you look at this chart here, it's been a absolute vertical rise for China since 2005, from nothing in the 1990s, and absolutely crushing the combination of both the United States and the EU. So basically, China has become the factory of the world, and a lot of this tariff stuff now is to try and reset some of that, or else China will own the world, and that's just the reality of the situation. And another little cool macro chart, it shows you as well, if you imagine this chart here, left is negative numbers, the right is positive numbers. And if a region is spending more than it's saving, it's borrowing money. And that means negative left. And here from this chart, you see the US has a huge negative balance of about $1 trillion US, meaning it's borrowing a lot. And shout out to those in Europe and China. They are saving a lot. So US is spending money like it's going out of fashion, and the Europeans are saving big time. That took me a little bit by surprise. And another thing that happens during these downturns, if you are in the market for things like a castle, real estate, etc., it could become very close to a good time to buy. This is a chart from Zillow, and every large metro area is expected to drop in 2025. And that includes San Francisco, the highest of them all. And me, I own real estate in San Francisco. So I'm going to take it in the shorts. Again, it's been very bad since C19, but here we go. And finishing on a happy note, everybody. Like for James, thank you, name here. Appreciate you. This is a kind of a funny meme du jour. I thought it was hilarious. My son sent me this. I lost all my money on Ohm, fully wiped out, everything gone. Screw this crypto poop. I'm done. And then KR the Ghost says, come to Pulse Chain with whatever you got left, brother. You could lose the rest there. I thought that was very funny. Anyway, crypto is the Wild West. Always hold the majority in very solid, safe assets. Allocations matter. Risk management matters, everybody. Thank you all for coming. Thank you, Sean D. Thank you, K8. And everybody else, have a great Easter. See you all tomorrow for the Q&A. Good night, everybody.